What up, Hyperchange? Welcome to another episode. Today we're doing a Q3 2019 earnings preview. Got an epic guest on the line, my favorite Tesla bull podcaster, Rob Maurer from Tesla Daily. Thank you for joining.
Yeah, thanks for having me on.
Yeah, thank you. So Rob's podcast, you guys don't know it, Tesla Daily. I'll put a link in the description. I'll check it out. Amazing investor-centered podcast for Tesla. And this week we have earnings coming up on Wednesday. I'm sure you guys are all, plugging in your own estimates, but I really wanted to have you on and sort of just kind of have a conversation about what we're expecting, not only the numbers, but what kind of business updates we are looking for to be announced on the conference call in the letter. So I was thinking we could start with just at a high level. We know what the deliveries are, about 97,000. How did you feel about those numbers, and were they what you were expecting at the beginning of Q3?
Yeah, I think I felt really good about the numbers relative to, I think, the expectations at the start of the quarter. Obviously, expectations rose towards the end of the quarter when we got that leaked email from Elon saying, the 100,000 delivery target. Then Wall Street estimates kind of went up based on that email, which makes sense. And then we ended up missing those revised estimates that were higher. But in terms of where things started out in the quarter, I think, if you would have said 97,000, people would definitely be happy with that. And it definitely gives Tesla a shot at hitting the low end of the guidance, which even if we step back to like Q1, I think when those results came out, no one really thought Tesla had a shot at hitting that 360,000 annual delivery number yet, or at that point. So for them to make the progress that they've made up to now through Q3, it has been, really solid, I think. And definitely happy with those numbers.
Yeah, and it seems like the add-on demand or continued demand of the Model 3 is really surprised. And I feel like we went through this cycle of like right after, at the beginning of the year when we saw guidance, we were like, oh my God, this is such a sandbag. They're going to crush this. They report Q1 and then we're all like, oh my God, there's no way they're hitting the low end of their guidance. And now, so we've kind of had to calibrate, and now it looks like they actually will come through. And be able to hit that 300, probably closer to the 360,000. But I'm in your kind of camp, like way better than what I was originally expecting, which was around 80,000 deliveries. So to see them hit 97, a little bit bummed that the media narrative twisted so much just because of the leaked Elon email, but that's the game. The good news is that once with those numbers, we can kind of plug in what we're expecting for the financials, get a really good idea of that. I don't know, I'm curious, maybe even before we get into our predictions, why as an investor is it so important for you to be tracking, the quarterly call and the conference and the letter and that stuff?
Yeah, I think for us, we're both very long-term investors. So the quarterly earnings, they're obviously important, but we're more focused on, kind of the fundamental things that are happening within the business that are going to impact it longer term. So the biggest things that I'm looking at is kind of profitability is important, but really like how those numbers are shaking out in terms of how they're getting to profitability or, lack thereof. So for me, what I'm really looking for is improvements in both the gross margin and then the operating margins. Because as Tesla continues to raise production, specifically on Model 3, they should be, generating economies of scale that really allows them to capture more gross margin per vehicle, which that's a huge fundamental improvement to the business. And that's what we need to see. And then simultaneous to that, as Tesla continues to deliver more cars, not only are they capturing those economies of scales benefit on the gross profit line, that's going to then trickle down to generating operating margin. And then that's eventually what's going to lead us to profitability. And, that's kind of the biggest question that people have in terms of Tesla's viability long-term is if they can get to that level where, the gross profit they're generating on the vehicles is offsetting kind of all the scale that they need to have with the fixed costs of their business. So really what I'm looking for each quarter is kind of like how Tesla's progressing on that path. And I don't care necessarily if they're, profitable this quarter or profitable next quarter. It's really just about like, is there the path to profitability still? And are they progressing on that path?
Yep. And with Tesla, you have a company that's changing so quickly. That's the way I kind of look at the quarterly results. First of all, you're looking in the rear view mirror. I think you and me are in the same boat of looking ahead at the technology, at the market share to really try and understand this company. But it's important to make sure the financials are falling in line. But I also don't like to put too much weight on them. It's like, is Tesla trying to maximize their profit in this period? No, not a chance. They're trying to grow. There's a million strategic initiatives going on. So I think you have to get way under the hood when you actually read these financials. I think that's part of the problem why there's so much hype on them. They kind of get misinterpreted a lot is because it's frankly extremely complicated. There's so many moving parts. But anyway, that being said, we should just get into it and do our predictions for the numbers.
Yeah.
I guess I'll go first through mine. I'll put a link to it, this spreadsheet that I'm going to show you guys, really simple Google Doc. But the way I think about it is, okay, we see the numbers from Tesla come in on the deliveries. Here's how much automotive revenue they got each quarter. Just divide it simply to get a rough estimate of revenue per car. So when we see 97,000 deliveries, and then a percentage, about 82% of those are Model 3. That's a little bit higher than they have been previously. So I dropped the revenue per car to 62,000 this quarter from 63,000 last quarter. That includes service revenue, so that's why it looks a lot higher than the sticker price. And then I assumed like a little bit of improvement in gross margin from 14.7 to 16% for the entire auto business. And that got me to automotive revenue of 6.029 billion, gross profit of 965 million. I added in energy revenue of 400 million. We can get to that later. But basically at a high level, I'm thinking revenue of about 6.429 billion, EBIT or operating income or operating loss of negative 62 million. So a slight improvement from last quarter on the bottom line. And the top line is going to be down 6% year over year, which I think is something for us to get into about how the market's going to read into that. But these are the numbers that I'm expecting, very close to profitability. Actually, cash flow will be positive and be very strong. Like last quarter, they lost 167 million in EBIT, but they produced about 600 million operating cash flow because they produced a lot, or they sold a lot more cars than they produced. That gap shrunk a little bit, but now we also have improving margins. So I think all in all, it's such a guess, really just guesstimating here, but I think we're probably going to see another couple hundred million in cash flow, operating cash flow, even after CapEx. And so I think the cash balance goes up to maybe 5.2, 5.3. And that's kind of at a high level of what I'm thinking.
Yeah. So, I mean, in general, I'm agreeing with that. Like the numbers that I have are a little bit lower in terms of revenue. I'm expecting, you know, again, we have kind of low confidence on this. We have really good information from the deliveries, which gets us like in a really solid range. But there's so many variables, especially on like the service line, where it's really difficult for us to forecast revenues from there. And then also on the energy side of the business too, a little bit less difficult to forecast, but still a lot of variability that can sway things pretty significantly from what we might expect just from deliveries. So that being said, like my revenue is a little lower. I'm at like 6.3 billion. In terms of the auto and service, so comp to your numbers, probably around like 5.9. So I'm agreeing, energy is probably around that 400 million level. And then in terms of gross profit, expecting just under $1 billion probably on that line. So I think around like 15.7-ish gross margin. Once you factor in, all the mix from service and things like that, which unfortunately tends to have a negative margin. So that's a line I actually watch really closely too, because as that revenue grows, hopefully we start to see some, positive leverage happening there with service too, because that's really been a drainer on profitability. The other kind of wild cards that we've got too are the deferred revenue. So this is something we've talked about offline quite a bit. So since Tesla shipped Smart Summon at the end of Q3, at least, to a portion of their markets within the US, they should be able to recognize some of that deferred revenue. So on the last 10Q, they said there would be $567 million of deferred revenue recognized over the next 12 months. That was their expectation, at least. So I think it's a mystery right now how much of that would be allocated to Smart Summon as a feature, and then how much of that actually gets recognized from what they ended up rolling out in Q3. I think we're both expecting maybe like $50 to $100 million of that this quarter. Correct me if you have different numbers, but that's also kind of a wild card too. And that, obviously can impact margins too, because that should be high margin revenue. I'm not sure exactly how the costs are accounted for on that deferred revenue, but the nice thing on that too is as Tesla starts recognizing some of that revenue from these autopilot features, full self-driving features, that's just going to improve their margin going forward too. So not only are they going to get that benefit of recognizing it, it's going to allow them to recognize it as it accrues in future quarters versus having to defer it again, which then should drive some of those, operating leverage things that we were talking about before. Anyway, that was kind of a tangent, but a lot of variability on the revenue line.
Yeah, no, I love this kind of going down this rabbit hole because it's very, it's a tiny accounting difference, but it's really an example of this whole transition in Tesla's model. As more and more of it goes to software, the cars get higher margin. And now we have this weird catch-22 of like, they're getting the cash up front, which is why the cash flow is great, but they can't recognize on their GAAP statement until they, really deliver those features. Then they're just moving around, money on their balance sheet and income statement, but the cash isn't actually changing. So this is going to be something we're gonna have to get more and more used to. I'll actually say, my guess is because it was mostly US and because it was Smart Summon, I don't think A, there was a huge amount of functionality. B, the geography wasn't there. So I think out of that 500 million potential, I'm a lot closer to maybe 25 to 50 million, maybe even a little less.
Yeah.
But that either way, it's pure margin, and that should help. And I think at a high level, we're starting to see the margins of Tesla's business go up as they're literally charging people more for software. Like, to me, this is the thesis of why is Tesla potentially the highest valued at so much a higher on a car's sold basis, on a revenue basis, not just the growth. It's that the profitability per car and per dollar of revenue is going to be way higher. And we're seeing that now with this as they get closer and closer to autonomy. So I think at a high level for long-term investors, this is something we should really be paying attention. And it's funny because CNBC, like when I went on after the last quarter, they're saying how crappy Tesla's gross margin is, but they don't realize that the cash was great and they just couldn't book that gross margin. So it's funny to see how Wall Street is like pinpointing this as a negative when really it's an incredible positive transformation going on.
Yeah, 100%. The other thing too, just I guess while we're on the topic of the profitability and some of the variability that's happening there, I think one thing that obviously impacts the profitability significantly is depreciation and amortization. So that's like hundreds of millions of dollars per quarter for Tesla, and in my opinion, at least, the how Tesla accounts for that is probably pretty aggressive. I think I'd have to go back and look at the 10Q or the 10K, whichever one's it's in, but they kind of outline their depreciation strategy. And like for the equipment for the Model 3, for example, most of that's amortized over, 1 million cars produced, which I think Tesla can probably, this is speculation, of course, but I think there's a lot of equipment that Tesla has on the Model 3 that's going to, produce more than 1 million vehicles. Because once it's, fully up to speed, that's going to be maybe 3 years of production if we're talking from Fremont, possibly even less. So I think a lot of that equipment can, extend beyond sort of how Tesla accounts for it. And then aside from that units of production method of depreciation, they also use straight line depreciation. So they're accounting for things for a certain amount of time, which as production gets ramped up, you obviously have more depreciation hitting in those periods of time where you have lower production. And then because it's constant per time as you ramp up production in any given period of time, the depreciation per unit comes way down. And that's one of the things that allows Tesla to show improving profitability as they get production up. So as Tesla continues to get production to full scale, both in Fremont and then eventually we'll see this in Gigafactory Shanghai and things like that too, that depreciation hits their profitability significantly, but that's just an accounting thing. That's not a cash thing. And that is one of the reasons that Tesla can have free cash flow positive without showing profitability. And I think that's why we're really focused on the free cash flows, because that's how Tesla funds the business. It's not through accounting profitability. Yes, of course, over time, like those things need to coincide, but theoretically, as Tesla continues to grow production and capture better profitability, those profitability will improve and then eventually become positive as well.
Yeah. And that's a great point. And it's like, we're not in an accounting class where it's like you're looking at one metric and it only lives on the spreadsheet. It's like we're thinking about this as a business that needs to grow, that is constantly changing and evolving. And I think, to translate a little bit of what you just said into English, they buy their huge robots up front. That costs a ton of money, but they're not counting for that expense up front. They pay for it up front, but on the income statement, they do it over time as they amortize and depreciate those assets. But the point is, from our perspective, the cash has been spent. All the robots are in Fremont. Now they're just building more cars. That's why Tesla pumped out 500 million last quarter. So that's why at a high level, they're not profitable on the income statement in Q3. But why am I pumped? Why is the thesis working? Because I was like, okay, they're going to spend a couple billion, build out all this equipment for Model 3. After that's spent, if this thesis works, if they can build cars profitably, which nobody thought they could, then now they should be pumping out hundreds of millions and be really in a solid financial position, validating this sort of pattern of like, we're going to spend a couple billion up front and we're going to get a ton back. And so I think if you look under the hood, this business is, the Bloomberg article about look how much money Tesla burns each second. That flipped. They're now pumping out 500 million in cash. Bloomberg's not rewriting that article. But so I think it's funny how everyone is forgetting to look at free cash flow now, that it's amazing. But that's why at a really high level, what I see is going on, it's like, okay, they don't look profitable, but really what's going on is Model 3 worked and Model 3 is making them a lot of money. And that's why they're able to invest in Giga 3 Shanghai and building out this Model Y line now.
Yeah. And the really exciting thing about that is that Elon has said time and time again that they continue to learn from what they've done with Model 3 and Fremont. And like for Model Y, they should be able to spend even less CapEx to get equivalent production for Model Y or even better. I think he's, I'm going off the top of my head here, but I think he said like on the order of like half of CapEx for what they did with Model 3 for Model Y. So when you think about kind of like how that projects to profitability in the future, that depreciation and amortization per unit is going to be, projected as half versus what it's going to be. So like we'll see the expenses now in CapEx, but over time we should get a better return on that spend, which then should improve profitability in the future for, basically from this line item. So it's really exciting to think about that. And then on the free cash flow too, yeah, Tesla's, that's flipped very significantly. And I think over the last like 18 months, trailing 18 months, Tesla's been free cash flow positive. I'd have to double check on that. But, and then again, this quarter, I think we're both expecting another positive quarter. Kind of depends what they spend in CapEx, but they're definitely starting to show the sustainability on the cash line, which is really exciting.
Totally. And from a management growing up perspective, I feel like we're in such a stronger place than a year ago. They were stubborn. They didn't want to raise cash. The equity price was falling. Elon's doing stupid stuff. He's totally seems to have learned from that situation. And they raised the money. They're pumping out billions. Like, just from if you were inside Tesla's office, there's a significant amount more confidence. And I think the company is just literally in a much, much better place than it was a year ago. Which kind of brings me to the next part of the conversation. Oh, actually, one thing I wanted to mention is Bezos has this comment that's like, your financials are always like, it's not the work we did this quarter, it was work we did years ago that brings the financials to this quarter. So when you're talking about that CapEx reduction, people don't get this. The pace of innovation at the machine that builds the machine level is huge. Like Martin, from my time spent with him at the Gigafactory at Fremont, it's like the biggest takeaway I have is like every production line's better. And they're like, I can tell they're like antsy in their seats, jumping out of the seats. They're like, well, give us a new blank factory. Let us do a new production line because the amount we know is just going to crush it. So not only do we have economies of scale hitting, but we have them making the products more profitably too. So I just think that's worth hitting on because I think that's really what sets them apart. But kind of moving forward into that, the Model Y, we're getting so many rumors about early Model Y. This is something that I'm kind of been rooting for and been speculating, like, are they sandbagging it? Did they finally learn? We've been seeing Model Ys pop up around, like in the news last week. People are seeing them on the roads. What are you thinking about that?
I try to be cautiously optimistic on this because I know people, they see the sightings and then the speculation starts about things happening earlier. There's the clean technical rumors about, okay, Model Y production is now in Q1. And then now with kind of like the delayed Model 3 timelines for the US delivery estimates, people are like, oh, maybe like Model Y is happening right now just because of like how many we're seeing out there. So it's just like Tesla's guidance is fall 2020. I do think that's slightly sandbagged. The Model Y event itself was very understated. I think you've called out, at the shareholder letter, there's like some giggling and stuff when they talk about the timelines and things like that. So there's definitely, to me, I think plans to start Model Y production earlier. My expectation has kind of always been in the first half of 2020. I think originally my expectation would have been Q2, and then they kind of ramp up, in Q3 and Q4. And that's kind of why they give the guidance of fall 2020, because that's when they'll actually be able to deliver some units in volume. So I think the expectation has probably always been for them to start sometime in the first half. With everything that we're seeing now from Model Y, like the first sightings for Model 3 happened about 3 months before production. And for Model X, it was about 7 months before production. So even if we use the midpoint of that and we say, okay, Model Y, maybe it's going to be 5 months, that puts us, end of Q1. So, and, potentially if it's something like 3 months, could be even sooner. That's pretty limited data to go off just those two examples, but just to kind of get an idea of the timeline and, fit that into kind of the rest of the things that we know. So all that being said, with the clean technical rumors, things like that, the sightings that we're seeing, my expectations probably move from sometime mid Q2, maybe now towards like end of Q1, maybe like March-ish.
Wow.
But hopefully we'll get some information on that this call. I know, I'm sure they'll get the question about that.
Yeah.
So we'll see.
And
What are
it's
your thoughts?
it's one of those things where I feel like this is so much pieces of Tesla's news. The pendulum has swung to like so much negativity on Tesla with the share price in the market. Like the Model Y, to me, I'm like, this is around the corner. This is going to double the TAM. This is a huge growth driver for Tesla that they're executing on and moving very quickly, that I just think is not in the Wall Street zeitgeist about Tesla right now, not in the narrative. And so I think this is, as much as I hate to get into the Wall Street quarterly game, I'm a long-term investor, and I've seen this play out a lot of times where you really get that alpha and that outperformance in the equity is when Wall Street starts to appreciate these longer-term things and price them in. And so I think the pendulum has swung, and you talk about the Semi, the Model Y, the battery day that's coming up, the solar leasing thing. Who knows if that turns around solar deployment deployments. So I think there's just a lot of exciting things brewing because Tesla's always moving fast. But now the consensus is that none of these are really reality. Like growth is kind of stopping. And I'm like, no, the Model 3 is getting better and better every month. And they just doubled, like not only is it geographic expansion, but it's product lineup expansion with the Model Y. So that's why and I think if they have confidence about even just delivering that on time, I think Wall Street's going to get pumped.
Yeah, 100% agree. And, the expectation historically for Tesla is that they're going to miss deadlines. So for them to, have a shot at making their annual guidance here, have a shot at hitting the Model Y timelines, maybe even hitting them a little bit early. And then same thing with Gigafactory Shanghai. Like we've seen that obviously the progress there has just been incredible. So I think, if Tesla can kind of hit on all three of those things, that goes a long way in terms of getting that credibility that they kind of lost, I think, last year, and kind of throughout the Model 3 ramp up. But you brought up an important point about growth because this quarter, both of us are expecting to see year over year declines in revenues, which is, interesting. I don't know if that's ever happened in Tesla's history before. I'd have to check back, but obviously that's not the norm. And I think that's probably going to get a lot of attention in the media once the results come out of like, okay, the growth story's over. Tesla's, revenues are down year over year, and this is a company that's valued, whatever. You can't value them on earnings because they don't have earnings, but I was going to say they're pretty highly priced, but even like price to sales, they're pretty low at like, 1.5 or whatever they're at now. So
right, their sales have been growing so much. Like even that argument has kind of crumbled recently.
right.
It's like, but yeah, and I think you're right. I'm worried about, Tesla never gets fairly reported on, it seems, and this is an easy headline to grill. Why are you comfortable with year-over-year decline in revenue growth? Like, why is this?
Well,
not
so it's because, and then that goes back to the main point here is like Tesla's business is right now kind of, I don't know a great word for it, but like there's some bulkiness to it. So like the quarter we're comping up against now is Q3 last year, which was obviously when Model 3 really started to take off in terms of production. And they were really, cranking out performance and all-wheel drive versions and shipping them to the US basically entirely, or I think entirely exclusively at that point. So it's a really tough quarter to comp. And then at that point, we still had, incredible sales from S and X. So, all those three things stacked up. It's just, that one quarter is going to be tough to compare to. But then when we think about next year and we think about like comparing to 2 years ago, like if you look at, the compound annual growth rate, it's still very strong. And once we get to Q3 next year, like Elon has said, the delivery growth should be really incredible for Q3 and Q4 next year sequentially, which means like Tesla should be pretty easily at that point, above like the 500,000 per year sort of quarterly production rate. So yeah, there's just kind of that like weird bulkiness that now we happen to be comparing against a quarter that had a lot of, tailwinds for it that don't really exist now, but will continue to exist in the future. So I think as a long-term investor, like you can feel very comfortable with a quarter that, has declines for these very specific reasons. The one exception to that being like S and X, I think it is disappointing. Like I think a lot of people this year have been really disappointed with S and X, myself included. Because if, this year would be really phenomenal and it's still a great year, but it would be really phenomenal if Tesla was able to, still do 100,000 S and X, but that's just not the reality, unfortunately.
And what do you think? This kind of ties into my question of the Model S Plaid powertrain. That's basically the whole refresh. Everyone is getting so excited about that Elon said it's not happening. It's like, well, it actually kind of is. There's the Plaid thing. And now that's going to be hanging over Model S sales until Q3 2020, probably Model X too. So, but I'm like, okay, sales are going to be bad in the mean term till then. But the fact that they're not sunsetting that product line and that there is going to be a refresh and that sales are probably going to well eclipse that 100,000 per year run rate they were at once that happens, and I think that answer you touched on about Elon is so insightful. When he was thinking, you could hear him thinking in his head about each product and about the growth of each quarter. I think that is worth listening to 10 times again for every Tesla investor.
Yeah,
because
100%.
It is low key a leak of exactly their production ramp. And that's why Q3, why is it Q3? You're going to have Model Y, you're going to have China on full cylinders, you're going to have the new Model S and X, so really, really exciting stuff. But
100% agree.
How do you think this Model S kind of Plaid powertrain announcement has thrown a wrench? Like, I'm like, what the hell is going on at Tesla's management level? Like, what are they thinking here?
Yeah. It's interesting because, I think they definitely run the risk of osborning some sales right now. And, the counter argument to that would be, okay, with the Plaid powertrain, it's like, okay, they're only osborning the top end of the line because they're only going to convince people that are buying, the performance Model S with all the options, which, even the price on that has come down significantly. So that's probably a bigger percent of the mix nowadays. But um, I think for people that are making that argument, it's important to think about, okay, are you really going to buy even the lower end of the Model S when Tesla's updating the powertrain on the high end? I personally wouldn't. I would wait to see if any of those developments trickle down throughout the rest of the range. So to me, like if you're sitting there in, April, May next year, like why would you buy a Model S or Model X at that point? So Tesla's going to need to do something to kind of get through that period of time, I think, whether that ends up being discounting or whatever they come up with. It just could be, it's a liability that's out there based on this development. But then the other side of that coin too is like, for these periods of time where you have Osborne demand and people are holding off, then you have a period following that where there's going to be a surge in demand because there's going to be this update. So we need to think about that too. It doesn't really matter, again, for long-term investors, whether Tesla sells 0 in the first half and 100,000 in the second half, or if they do 25,000 per quarter, as long as that demand is still there for Tesla, which I think that's kind of the benefit of doing the Plaid powertrain, is like those people that maybe were going to go purchase a Taycan now are like, all right, I'll just wait for, the Plaid Model S next year. So they can kind of secure those sales and, put them in their back pocket to some extent. So I think that's the benefit of doing that.
And at a high level, if you're a company that's Osborning your own products, I mean, that's what Apple did with the iPad, and we were all talking about it. And so at a high level, I think the reason why Tesla has these growing pains is because they're changing their technology so quickly. It's getting so much cheaper. Now all of a sudden there's a 300-mile range EV on the market that's just like a Tesla, the Model 3. Of course, the Model S gets in it. So I think at a high level, it's actually a symptom of the fact they're so disruptive. The pace of innovation is so fast. Audi's car's not getting cheaper and better at this rate. Neither is Porsche's. So I think at a high level, it's a good thing, but there's going to be some tricky lumpiness, I guess, to the quarter.
Yeah, 100%. And that kind of goes back to the whole software thing too, is like the more that Tesla becomes more of a technology and software company, especially in terms of the financials, the better it's going to be for them to have just more units out there. So for them to like cannibalize themselves, as long as they're delivering more units, I think long term, that's the correct move. Like I'd rather have 2 million, Model 3s out there than like 1 million Model S and X, even if that ends up being the same amount of revenue or slightly less today. It's going to be better long term as Tesla can more capitalize on that software stuff. And the other thing too is it grows the fleet and allows them to collect more data, that's obviously not going to play out in the financials too, but a significant benefit fundamentally for Tesla as a business.
I think it could play out in the financials in terms of word of mouth, because it seems like this V10
True.
is a real
100%.
marketing awareness boost. And it seems like we've really turned a corner. If I keep saying like, wait till Autopilot starts getting better, it's going to get better. And I feel like it kind of wasn't, but now it seems like we've sort of, everything's gotten figured out and there's a clear sort of improvement month after month that I think is really hard to deny. That at least makes me excited about that autonomy thing. That's a whole nother thing Wall Street's not believing. That is getting closer. But I don't know. Do you have any feelings on the Autopilot, that robotaxi timeline?
One quick thing too, just on like the amount of units being out there helping the financials too, like word of mouth is a huge selling point for Tesla. Like obviously they don't do much marketing and no advertising. So every Model 3 out there is another vehicle that's there that someone can go drive, that their neighbor owns or their friend owns or their coworker owns. So like having 2 million of those vehicles out there versus 1 million, like that just extends the web of word of mouth even farther, which again goes back to the financials and benefits. So I think that's important. And then on the Autopilot side of it, I mean, I think we can all speculate as much as we want. I think none of us really know it. I 100% agree that Tesla seems to be making really good progress kind of in the second half of the year this year. I'm hoping we'll get some updates on that in terms of like how they're feeling about the Smart Summon rollout. It seems like it's going pretty smoothly. I know Elon said on Twitter a few days in that they've had over 500 million uses, and I think we've seen very minimal accidents or fender benders or whatever from it. So I think from the minimal amount of information we have, it seems to be going very well, and people are pretty happy with the feature. Obviously, it's still a lot of room to develop still, but and then on the back end, not necessarily showing up in like the UI, but Tesla's working on getting stop signs and stoplights and things like that we've seen pop up on various YouTubers that are looking at some of the code and stuff. So they're definitely working on it and getting closer. And from Autonomy Day, obviously, you were at that event, so you had to see kind of like what they're working on their end. And I think slowly that's just going to keep trickling out. And it doesn't necessarily matter to me, whether they get full self-driving in 2 years or 5 years. What I think is important is if they're in the lead. And I think it's
Definitely.
pretty easy to argue that they are, depending on how you feel about, LiDAR and vision strategies.
Yeah. And a little bit of context on this deep scale acquisition, which I think not a lot of people have understood. It seems like sort of this acqui-hire, but from talking to Martin at Tesla, it seems like from a vision perspective and that sort of vision based, autonomous driving approach, this guy was like up there with Andre Karpathy. Maybe he's Andre's number one in the world at computer vision. This guy, Forrest Iandola, is number two. And that's why
That's awesome.
they saw him doing like that kind of incredible work. And so, I don't know. I'm that's not going to change what's really happening with the company, but I think it was very encouraging to see them kind of like double down on that intellectual talent.
Right. It shows that they're not really pivoting from their strategy. They're just kind of continuing and enhancing it further.
Yeah. And really bringing in all the world leaders, which is what you need to do.
Yeah.
So I guess switching gears a little bit, solar leasing is one thing that I'm kind of curious about, that I hope we get more strategy on, because it seems like that requires a huge amount of capital to install these solar systems. I guess they have cash. What are your thoughts on that?
No, that's a huge question for me too. I don't know how much information we'll get from that this quarter, unless they happen to talk about it on the call or somebody asks about it, hopefully. But I just don't think it's going to be, transparent in the financials yet. So hopefully they'll talk about that, because it seems very similar, obviously some differences, but very similar to kind of like the SolarCity business model,
Yep.
where they did long-term leases and then they kind of bundled those and sold them to get the capital. So I'm curious if Tesla will do something like that with, the rentable solar. I'm not sure how that works as a financial instrument, but yeah, it's interesting, because obviously that's a huge cash outflow for them up front, and then just, small recurring payments over time. So, 30 years, sure, that's a great strategy. But like right now, as a high growth company that, some people would say are capital constrained, I don't necessarily agree with that, but that's certainly the perspective of some people out there. Is that the best use of capital? And I think that's the question.
Yeah, it's sort of like left me scratching my head about why this is a good use of capital. And also like, what about the solar roof? Like every year is the year of the solar roof. And is this like, is that they finally kicking the towel in or really delaying that? I don't know.
Yeah. And that's a really good question too, because I think a few months ago, Elon tweeted that they were, hoping to start cranking out like 1,000 per week of those at the end of the year. And that wasn't that long ago that he said that. That might have even been in the last
V3, they had
quarter.
like a whole
So,
V3
mhm.
of the solar roof.
So, right. So, it seems like there's some progress happening there, but again, we haven't seen any of that play out yet. So I do hope we get an update on that. I hope we get some more information on kind of the rentable solar. It's an interesting business model. Like I think it has a lot of potential. It's just, again, that question of like how it's financed.
Yeah. And I actually, a tidbit on this is I was meeting with this guy who works at Ford in their new energy division. And like, he was telling me that he was trying to pitch them on this so hard. Like, it's a no brainer. If you're buying an EV, you're going to be interested in solar. The biggest like friction of that whole process is marketing and customer acquisition. This is a no brainer financially. So when I heard, and then so I think people are like, oh, why is Tesla getting into that? Because they have that exact same like zero marketing friction. And so from that angle, I was like, okay, I think there is something here. And since SolarCity has gone away and kind of died, or they've RIP'd its business model, the tech has gotten way better. And so maybe that improvement in the tech is also kind of allowing this.
Yeah, it could be. And then even aside from like the financial impact too, like just thinking about Tesla's mission, for them to be able to, increase solar deployments is a good thing, for the company and for the world. So obviously they can't just, do that out of goodwill, but if they can afford to do it, then it obviously supports the mission, which is good.
Yeah. And I really hope we see a turnaround in that solar deployments chart, which
Yeah.
I'll put up on the screen, but it's been
Yeah.
a steep drop off. So now I think
Dismal.
this is pretty dismal. So I think we got a shot at reversing that.
Yeah.
And then I don't know, I guess that's kind of it. What I'm thinking about the quarter, always just on edge to see like what like nuggets are going to get dropped that we're not even thinking about,
Yeah. Yeah, for sure. For me, like the biggest things I just kind of wrote down like what I'm watching for. So Model Y status, Gigafactory Shanghai, obviously. I think there's hopes that that's starting production, anytime now. So
yeah, we didn't even talk about that. That's
yeah. So hopefully we get an update on that on the earnings call. I think that's something that people are excited to, find out about. And if they say, Model 3 started being produced or at least assembled in Gigafactory Shanghai, I think that would be a big positive for the short term. And then, yeah, solar leasing guidance I think is interesting because right now the last range that we have is 360 to 400,000 for the year. So I wonder if Tesla will narrow that. I don't think the 400,000 is very likely at this point. And they need almost 105,000 to hit the lower end, which will be pretty interesting to see. So I kind of hope they narrow that guidance, because if they do, I think that will give some more confidence that Tesla can hit the lower end. If they say something like 360 to 370,000 or something like that. But yeah, then other than that, I mean, for me, I'm going to be watching kind of just like the operating margin in terms of like how SG&A is scaling, all those normal things. The service revenue we talked about, the deferred revenue, any information on that. And then just kind of like cash flow. So all
Yeah.
kind of the basic things. And then, as you said, if there's any, fun facts that they want to throw at us or anything like that.
Yeah. And I think those are all the financial things to look at. And I'm almost like, one thing I'm super curious about is this whole Panasonic battery day. Like, I have the theory that Tesla's about to go vertical, build its own cells. I think we're probably on the same page on that.
Yep.
So just hearing even how Elon talks about the business and just his tone, these are super insightful. This is one of my probably more valuable than the numbers in the financial report is like the tone of management, the clues that they're dropping, the way they describe things. There's so much insight to be gathered. And so that's what I'm personally looking for, is just like any hints dropped about Panasonic or how they phrase their thinking about battery capacity. These are all things that I think are worth reading into. So
100%. And I think it's really a good use of time to go back and read the transcript after the call, at least once, if not a couple times, because it can really help you like catch some of those little things that you might not hear at like a first listen. And obviously, we kind of do a lot of recapping of that sort of stuff too, but like, I think it's definitely worth it for people to just go through those things. Because like one thing that like nobody really talked about from last quarter was Zach Kirkhorn, I think I really liked hearing him speak about the business too, because he talked a lot about how they think that they're now at a point where, I can't remember the exact terminology that he used, but basically like the business was in a really good place in terms of they're now at the scale that they need to be at to be a successful business, basically. And, that's basically everyone's question about Tesla is like, is this sustainable? And he's basically saying, yeah, like we reached that point, but really nobody talked about that. So it's just like, there are so many little things like that that come out during the call that are super interesting and super important that don't get as much attention as they probably should.
totally. And I think that's a perfect place to end it. Like, at a high level, pumped about this quarter, because I think in the long-term story, this is validating exactly what we were saying a year ago. They're on track. They're funding themselves. Yeah, they're not, if you include the DNA, they're not pumping out a huge amount of money, but that's not where they're at in their business model. It's a company that was burning billions of dollars. So even just to see them get to that neutral level now is a huge, undeniable improvement. And a huge de-risking of the story. And although that's been happening slowly over the past year, this quarter is really cementing that new status of Tesla. And so that's what gets me pumped.
Yeah, same.
So any last words, Rob, or are we just waiting for the fireworks that are Tesla earnings?
We're waiting for the fireworks. Big week.
Awesome. Well, thank you so much for coming on the show. This was epic, awesome pre-earnings recap. So yeah, can't wait I'll be tuning into your podcast to hear what you think after the numbers are reported.
Yeah, likewise. Thanks for having me on. Really appreciate it.
All right. Peace out.
All right. Later.